Hello and welcome. Over the past few weeks, stock markets around the world have reached all-time highs, including the S&P 500, India's Nifty 50, Japan's Nikkei index, the German DAX, and the CAC in France. We've also seen a resurgence in the value of gold and Bitcoin, which have both reached levels never seen before. What's behind all of this? With so much hype around AI and weight loss drugs, it's easy to lose sight of the broader economic forces that have been driving markets higher and may continue to do so for some time. What we're seeing now is the combined impact of higher economic growth and inflation. Tradition tells us that high interest rates puts pressure on equity market returns, leading to lower economic growth and higher levels of recession risk. The fact that some markets are doing the opposite, rising in spite of higher interest rates, is making some market participants feel uneasy and question whether a bubble is emerging. If, however, we look past what we think should be the reality and instead focus on what the numbers are telling us, it's easy to see why we at Nutmeg are more comfortable with the rallies we are seeing. In the US, for example, economic growth is above trend. While recent data suggests that inflation is also above trend, positive returns in equity markets mean we're optimistic about the outlook for US stocks going forward. In India, GDP grew 8.4% year-on-year. Investors are coming from China, and the country's middle class are taking a more positive view of investing, three factors supporting equity market returns. Japan is possibly in the middle of a renaissance, thanks to corporate reforms that should create a more investor-friendly environment. Even Europe is seeing expansions in soft economic data that should be supportive of returns. Gold benefits from lower real yields, which are the returns on bonds after inflation. With rate cuts expected in 2024, something which will decrease real yields, the recent jump in prices makes sense. Bitcoin is enjoying a revival as new ETFs holding spot Bitcoin have come to the market. Spot Bitcoin ETFs track the price of Bitcoin and have opened the cryptocurrency up to more investors, explaining the recent surge in its price. So, all in all, the data is supporting recent rallies in equity markets and beyond, which is encouraging news for investors. We're constantly monitoring for shifts in what the macroeconomic data is telling us and making sure that the Nutmeg portfolios are positioned accordingly. Thanks for watching.